Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, June 21st, 2021, and I'm pre recording this Trading Places Live for Tuesday, June 22nd. Futures currently are up slightly. Let's see, I looked at it just a couple minutes ago. Let me just check one more time. Yeah, we're showing, well, right now I've got the Dow futures up 23, S&P futures up 4 3/4, and NASDAQ futures up a little over 18 points. So on a relative basis, showing just a little bit of leadership on the NASDAQ, which was different than what we saw throughout the day. And we're going to get into that in just a minute. In fact, let's go ahead and talk through today's agenda. And then I'll take you over to earnings beats for a second. But we're going to talk first about the daily market recap. That's what we always do. Take a look at what happened in the market on Monday. Then we'll get into talking technically. I'm going to go through some sectors, talk a little bit about the dollar, maybe get into copper a little bit. Then we'll move on to industry analysis. Consumer discretionary is at an interesting pivot area on the chart. I think we're going to break out. But in order to do so, there are several industry groups within the consumer discretionary area that we really need to take a look at. So I'm going to go through those charts. Then we'll get into the earnings spotlight. We'll wrap up the show with the three you must see. Before we do any of that, though, I do want to bring everyone over to earningsbeats.com. We have a free newsletter. I'd love to have you be part of our community if you're not already. Just simply type in your name and email address, hit the subscribe button. All of this is on our homepage at earningsbeats.com. The newsletters published 3 times a week, Mondays, Wednesdays, and Fridays. There's no credit card required. It's completely free. You can unsubscribe at any time, but it is an educational newsletter with some potential trading opportunities mixed in along the way if you like to trade. But I think it's a really great learning tool, and I think there are some tidbits, some things that the way we look at things at Earnings Beats, I think could probably help you in your trading. So go to earningsbeats.com, type in your name, email address in the space provided, hit that subscribe button and get started. All right, moving on to Monday's action. Big reversal. Dow Jones Industrial Average up almost 600 points, getting back all of what we lost on Friday. The S&P 500, beautiful reversal off the 50-day moving average, gaining 58 points on a percentage basis, not quite what we saw on the Dow, but we also didn't see the same percentage drop on Friday. NASDAQ, which was hit less on Friday, rebounded less, up only about 4/5 of 1%, or about 0.8 of 1%. We were up 111 points on the NASDAQ, trying to get back up and hopefully eventually getting through to a new all-time high close. Mid caps, big reversal here, up more than 2.25%. Same goes for small caps. So these two indexes, which were hit harder on Friday, also rebounded stronger today. So that was good news. All 11 sectors finished up on Monday, and we were led by energy. Crude oil prices, by the way, up another couple dollars, 73 and change. Last time I looked on crude oil prices, but I will tell you where we are. Yeah, right now we're at 73. After hours, we're down just a fraction, but we are currently at $73.44 a barrel. When we broke out above $67, one of the things I was talking about was on the short term, we had a measurement on a breakout that would measure up to about $77 per barrel. And also, I pulled up a long-term weekly chart and showed that $77 a barrel was a key resistance area if you go back and you look at a longer-term weekly chart. So I think we're well on our way to hitting that $77 target. And at that point, I'd be a little more cautious with oil. All right, but energy did have a very strong day, up about 4.25% on Monday. Financials rebounded. We saw the 10-year Treasury yield move up. That certainly helped financials. We'll talk about that yield in just a minute. Financials gaining 2.3%. Industrials up 2.2%. Materials up about 2.1%. And real estate up 2%. So 5 groups there up 2% or more, including energy up over 4% on Monday. So definitely some great action in the market. 10-year Treasury yield. All right. Well, one thing I want to mention, on Tuesday, we do have the May existing home sales coming out. The expectation there is for 5,715,000 units. April was 5,850,000 units. So we're actually looking for a slight drop in May's existing home sales. The overall home building group, which I'll be looking at a little bit later, is definitely leaning to the downside, beginning to trend lower. So I think that report, existing home sales Tuesday morning and then new home sales on Wednesday morning, likely to have a big impact on this group. So keep an eye there and see the reaction in the Treasury market too, because the yields, that 10-year Treasury yield, is kind of a barometer really of mortgage rates. So when that 10-year Treasury yield's moving up, tendency is for mortgage rates to also climb in that same direction. Although we're still we're at very low levels in terms of the yield on the 10-year Treasury yield and in terms of mortgage rates. Looking at the 10-year Treasury yield here, you can see we did break below the previous lows. We went up just above the 20-day. We got that head fake last Wednesday after the Fed announced that there would be no change in rates, and also talked about maybe stepping up and raising rates at the end of 2023 instead of early 2024. But after that, you can see the yield dropped right back down lower than where it was at the time of the announcement. And then today we bounced back to the upside. So we're getting some whipsaw action in both directions right now in the yield. But you can see financials, which had taken a big hit, did rally on a relative basis today, had a good day. And that was at least partly attributable to the fact that the 10-year Treasury yield was bouncing. All right, let's move on to talking technically. And first thing I want to do is I just want to pull up the Dow and just show you, here was the move down on Friday, and we came all the way back up just a little bit above the close where we were on Thursday. So we filled the gap. We've gotten it all back. Now, on this chart, the big problem I have is you can see the huge selling, the heavy volume. Now, it was quad witching. So we normally have extremely high volume when monthly options expire. March, June, September, and December. So when you look back, you'll see heavy volume June, heavy volume on that third Friday in March. Same goes for December, and then same goes for September. So you can see it makes a difference. There's a lot of volume on those days. So I wouldn't read too much into that. However, what I would read into is the fact that after putting in a double top here, we went down and we took out the low in between the double top. That normally is a very bearish short-term development. Now, we rose back up today, but was the Friday move to the downside the head fake where we had a false breakdown? Or was today's rally the head fake back to the upside? I think the key will be, if we do move up over the next couple of days, watch that 20-day EMA, which is about to cross. We're about to get that death cross back below the 50-day moving average. And we have not seen the 20-day below the 50 on the Dow since all the way back at the beginning of November, before the vaccine, that positive vaccine news came out on Monday, November 9th. So we had a huge run, but it does look like we're starting to roll over. Look at the PPO, which had been positive the whole time. That's just turned negative. We want to be careful when we get up to the 20-day moving average, because we could be in for a period of weakness, at least on the Dow. Now, we've seen bifurcated action, and what we could see is money rotating back away from the Dow and the S&P and moving more toward the NASDAQ and some of the growth stocks. We'll see whether or not that rotation, which we've seen really over the last few weeks, we'll see if that continues. But that's something to look for. If the Dow fails to get through the 20 and starts to roll back over, rotation has been the name of the game. That's what's been keeping the market afloat and driving prices higher. So if we do start to weaken in the Dow or even on the S&P, let's see if the NASDAQ is ready to grab that torch and carry it higher. All right, let's look at some of the sectors. So real estate, recently I talked about real estate needing a break. And you can see we were up here at about 45 and change, came down, hit that 20-day moving average, and now we're starting to bounce off of it. Short term, I think this is pretty bullish, the fact that we did hit the 20 and bounce. If we do go back to a new high, though, we're very likely to have a nasty looking negative divergence. Look at what happened last time we went up in May, beginning of May, pulled back to the 20, went up, tested that high. The PPO had gone much lower, and you can see that that move to the upside did not stick. And we needed more consolidation before we finally started to turn back around in terms of momentum. So keep that in mind. When I looked at the hourly chart, and this gets back to where I was talking, it was probably sometime back around the start of the second week of June, 7th, 8th, 9th, somewhere in here. As we were making this move to the upside, you can see the PPO on an hourly basis was much weaker, so we had a negative divergence. We did go up, and I'm pretty sure it was not the 10th when I was talking about it. I think it was earlier than this. So I think real estate kept going higher, but even when it pushed to a new high on the 10th, you can see the PPO still was weak. That marked a top. So now we're into our second week since then, and we've seen a lot of weakness. Now we're starting to bounce back up again. But as I mentioned on that daily chart, be a little careful there. And look at the volume trends turning much more cautious and more negative over the past several days, selling on big volume and then been recovering on lighter volume. The other thing I wanted to mention too is if we look at a daily chart on the XLRE real estate, and then we go out, I'm just going to go back the last 3 years. We've had a huge move in real estate. And so I just want to point out, if you look at that daily PPO 2.5, if you go all the way back, the only time in the last 3 years we have seen the daily PPO move through 2.5 was right here in June, coming out of the pandemic. And that was just, we'd gone too far to the downside, and then there was the recovery. So if you kind of wipe that out, this whole period, we're sitting right now about as high as we have been on the daily PPO. So I think it's just time for real estate maybe to pause a little bit here. All right, next up, let's take a look at materials. And what I wanted to do here is I want to show you a trend line. Now, what you can do is if you take a chart like this and you connect highs, and it's just about there. You see this high here? These highs right in here, this high, this high, this high, they're all perfectly connected by that trend line. So when you're looking at that, I try to figure out, okay, well, where would a, if I drag this line down, can I find some points to connect where I would have a channel in play? So what I'm going to do here is I'm going to drag this line down. Now, if I just connect this low and just put the line right on this low, look at where it comes in, right where we bounced today. Now, you could go down even to this low back here in May and say, okay, well, maybe we're going to fall back to about the 77.5 level. And that would actually make some sense because that's where we broke out from. Here was the high back in January, made the breakout, tested the 20, and then took off. So this area could be where we're heading, but really just depends. I guess every technician maybe wants to look at it a little bit different. I will say that that lines up very nicely with this low at the end of October. So if we do fall back down, you can see that that daily PPO has gone as negative as it's been at any point since the initial stages of the pandemic. So materials, in my opinion, definitely starting to weaken. You can see the volume picking up. It's just something to be aware of. All right. The other one I wanted to show you was XLE, which is energy. So if we look at the XLE and we connect, I think I looked at this one earlier. I believe if we connect the highs, so if we connect those highs right there, there's 3 of them, and I take this and I drag it down to the low in October, basically look at where we are right now. I mean, we are sitting right on this trend line. So I would watch recent lows because I think if we fail to hold on to these recent lows right here at about 50, that would break this trend line for sure, or channel line. So we want to be really careful with energy. I think we've got a little bit more upside to go here. But if we move back up again, just keep in mind that we've also had these highs. There was a high here back in July 2019, and then also just before the pandemic in January 2020, we were hitting up near $57. And that's about where we went to last time. So the next move to the upside potentially maybe could be the last, especially if the dollar continues to break to the upside. Now, I'm going to show you the dollar next. Look at the UUP. And I wanted to point out a couple things here with the dollar. Number one, you can see the last couple of weeks, we have definitely strengthened. We're not out of the woods. We have an equal bottom here. So we have a double bottom. And here's the high that needs to be cleared in order for this to truly confirm that a bottom is in play. So we'd have to get through that 25.20 area, or maybe just a tad below it, in order to confirm this. So that's the one thing I wanted to point out. So the dollar hasn't confirmed a bottom just yet, but if we come back down, hit the 20, move up again, and can get through that 25.20 area, I think a bottom is in on the dollar. And as a result, I would be very careful with materials and energy on a relative basis. They may still go up on an absolute basis because the rising tide lifts all boats. But I don't believe they will lead any longer, and they have been leading. I think we will start to see major rotation away from those groups if the dollar gets through 25.20. So watch that. The other thing I wanted to mention, I wrote about this in the daily market report, I think, or maybe it was, can't remember if I did it in the daily market report or I think it was in the daily market report. But anyway, what I wanted to point out is what you see a lot of times at the tops are these gap ups, and then the next day gap down. So you leave these candles on an island. So it's called an island reversal. And I just want you to look at all of these short-term tops where basically we had one or maybe two candles sitting at the top, and we just did it again. So you can see we left Friday's candle on an island, gap back down today. So this tells me chances are we just topped on the dollar in the very near term. And as we pull back, that's allowing energy and materials to move higher. But watch this dollar, because if we come down and we do manage to bounce before we get to the 20-day or right around that 20-day, and we can turn back up and put in a new high, similar to what we did over here in March, that's going to put some pressure, more pressure on energy and material stocks. So just keep that in mind. All right, one last chart for talking technically. I just wanted to bring up the copper chart just to show you we had such a huge run in copper to the upside, and that was going along with this big ride up in materials on a relative basis. This is materials relative to the S&P 500. But we came down here. We were putting in lower lows, lower highs, lower lows, lower highs, lower low. And you can see this topped out before we got up here. So we still have a long-term downtrend, long-term relative downtrend in materials. And so if the dollar does start to move higher again, don't be surprised if materials struggle once again as we go forward. I know a lot of people are thinking materials are going up, inflation's high, and this is a great time to be in. Well, it's been a great time to be in materials. I don't know if it's going to be a great time over the second half of the year. We will be watching this closely along with the dollar. And then, of course, energy. We want to kind of watch that as well. You can see the long-term relative downtrend still intact, even though everybody's talking about the huge move that energy's made recently. We've done that before. We did it in 2016. We had about a 3 or 4 month period in 2014. We had a big run at the end of 2010, early 2011, but they were all met with more selling on a relative basis, and we rolled over and kept going lower. I don't know that we're out of the woods. I don't believe we are in energy and materials, because I do think the dollar goes higher later this year. All right. Let's see. What else do we have here? How about we move on to industry groups? So here, what I wanted to do, and actually, let me go back over here. We'll show you the XLY just to show you the sector. See, I think that we're in an uptrend. Got the high, the low, the higher high, came down, put in a higher low. And now we're just sitting here. And if we can get above about 174 and start making a move, I think we're going to go to 180. But what areas in consumer discretionary should we be watching? And so that's what I want to talk about with this industry analysis. So let's take a look at home construction. Home construction's downtrending. I think it's pretty clear. Hit the 50-day, bounced to the 20, went to a new low, bounced, couldn't get through the prior high. New low, now we're bouncing back to the 20, which is below the 50. PPO's in negative territory. If home builders, and we've got existing home sales and new home sales out the next 2 days, if we could get through this late May, early June high, that would be very bullish. Get that, take out this double top. That would be one industry group that would certainly help the consumer discretionary area. Another one that we should be watching, this is the gambling stocks. And what I'm kind of watching here on this one, and I'll just annotate this for you. I mean, if we take a look at these highs coming down, you can see that downtrend line. But then from these lows, see how we're squeezing off of an uptrend? This isn't a symmetrical triangle. So we bounced on Monday on gambling stocks, but we're in this range of this triangle, 850 downside, 9.25 upside. Let's see which way breaks, but a break to the upside, taking out that earlier June high around if we can get through about 940, that would be very, very bullish for the gambling stocks. Next up, I'm going to move on, take a look at hotels. So hotels, the DJUSLG, lots of sideways consolidation. Now, we saw this once before, big move up. Look at the sideways consolidation, then the breakout. Now we're doing it again. A move and close above 2,600 is what you're looking for here. Next, recreational products. Recreational products, big move up, pulling back, going up, trying to get through the 20, failing, moving back down, but we came back through the 20 again. Can we get through that 50 and start to repair the recreational products chart? I think we can, but we'll see whether or not we get more confirmation in the days ahead. Clothing and accessories. This is the fifth group within the consumer discretionary area. I think it's pretty clear this area of support here between 380 and 390, we really would like to continue to hold that. It's been holding for 3 months. We'd like to see that hold and then break back up through that 50-day moving average. The other way you could look at it too is there's a trend line coming across here, connecting all of these lows, continuing to rise. So that's something else to watch as well. Restaurants. Can we hold this price support? See the breakout here just below 2350? Well, we went back just below 2350 and tested it. The overall trend is higher. I think we're going to break out, but let's watch to make sure 2340 or so holds on the restaurants. Next up, footwear. Nike reports its latest quarterly earnings on Thursday. And footwear, you can see many tests down here, 2300 to 2350. So can we continue to hold that and break back out above our moving averages? That's something to watch. And then the last one is broadline retail. And broadline retail, you can see 3550. And this is going to depend a lot on Amazon. Amazon's also up around 3,500, trying to get through major resistance. But you can see 3,500 here, a little over 35, or actually 3,550 there, Little over 35.50 here, just tested 35.50 again. Broadline retail, after many months of sideways consolidation, if we get a breakout here, I think this would be one of the more bullish areas to look at in consumer discretionary. All right, earnings spotlight. Not really a whole lot to go over here, but I'll go through just a couple of charts real quick. First, Plug Power. Plug will be reporting on Tuesday. You can see it had been downtrending for a while, but that came on the heels of a huge move to the upside. And now it looks like the downtrend has ended. We're starting to trend back up again. But a lot of this is going to depend on the overall, this current trend and whether or not we can sustain it. So can we move back up to that 35 area? Can we break through? To the downside, I would probably be watching about 28. I really wouldn't want to go back down below 28. We lose our moving averages, and then it would start giving the appearance of possibly going down for a double bottom. The other earnings report out on Tuesday is Korn Ferry, KFY. And you can see the huge move up, sideways consolidation. This would be a big breakout, big bullish breakout if we could get through about 68, well, maybe $69, that high at the end of April. The AD line still looks very strong. Looking at it on a relative basis, this has been a pretty good stock as well. So I think it's got a good shot to come out with a good report. The question is, what's the reaction? Do we get that breakout? All right, the three you must see. Let's wrap up the show here first with Qualis. I just wanted to mention, after the gap down, you can see the struggle at about 108 here. Notice on Friday, we went up, tried to break out intraday, failed, came back down, closed near the low of the day. Even with the market having a good day today, Qualis, that reversing candle, really was painful for the stock. Look at the 20-day now and see whether or not we can hold that on any further deterioration. The next stock, this is Baker Hughes. Baker Hughes double top, came back down, failed to hold the support level around 24. Now we're moving back up. Watch gap resistance at 24 and that falling 20-day EMA. Need to get back through both those levels. Finally, we talked about home construction earlier. Here's Lennar. Lennar did get back through its 20-day, unlike the overall group, but now needs to get back through 100 to take out that early June high. We'll see whether or not we can get there. Good volume the last few days, though, on this rally. All right, that's it for me. Appreciate everybody tuning in. I'll be back for your next Trading Places live episode on Wednesday morning at earningsbeats.com. So check that out. The show will start at 9 a.m. Eastern. Everybody have a great Tuesday, and hopefully see you on Wednesday. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.